Ladies and gentlemen, please take the opportunity. We have a few more minutes of Ms. Lagarde, and she's willing to answer some of your questions. If you have a question, please raise your hand, state your name and function, and have a brief question. Please, only questions.
Thank you. Madame Lagarde, if I may, you addressed the question of uneven progress of implementation of the regulatory reform in the various jurisdictions, and you deplored that. Now, when you look at the European Union, we see differences in the European Union herself. And I just think of the following topics. For instance, one concerns the structure of the banking, of a bank. You see in the UK, Vickers, you have the Licken report. The Commission is preparing suggestions based on the Licken report, but some are moving ahead. Think of the resolution funds. Some countries have, based on a banking levy, introduced resolution funds, but they differ in the way they're being financed and in the way they're being used. Think of high-frequency trading and short sales. Germany is moving ahead. So the question is, are we not, in a way, putting the single European financial services market in danger? And what do you think of this? And the second question concerns the ESM. You said the ESM is a financial backstop for systemic cases. Is Cyprus really a systemic case?
Thank you, Dr. Klintz. Any other questions?
Edgar Meister from the Bundesbank, member for the board. I would like to address a very brief question to you concerning the banking union. I think I fully agree with you that it's necessary to cut the link between banks and sovereignties. And that's really important. But the question I have, who should pay for it? Who should take the risks? And at the moment, as far as I can see it, it's mainly the ECB that takes the risk. But I think that should not be the end of it. Do you think it's possible that more private people, private lenders, can part on these risks, and maybe some taxpayer too? But I think that this problem has to be solved in this framework. Thank you.
Yeah. One last question. No. So the floor is yours.
Yeah. Well, those are big questions anyway. There you are. You know, I could not agree with you more on the fact that these sort of segmented, fragmented proposals that are all well-intentioned and that are driven by either the size of the financial market in a particular domestic case, or by the urgency of delivering on electoral promises, or by the financial pressure under which a particular country finds itself, lead to different approaches, which will, in due course, create a problem in this European financial market. I have to tell you that I was reassured when participating at a Eurogroup meeting on these issues. I heard the German finance minister and the French finance minister, for that matter, both agree that while they were going ahead and implementing their own reform, they would actually adjust as necessary as soon as the European regulations would come into force and would be approved. But they felt that given the their domestic situation, they had to move ahead. So if it is a common approach by all governments, particularly within the 17, to actually adjust and align and make sure that they all under the same principles, it's a transitory phase which hopefully will not impede the European financial market. On the issue of short selling, for instance, and sort of very decisive and aggressive measures that sometimes are taken by the regulatory authorities, I think there has to be circumstances during which emergency measures can be taken. you know, I do remember days when short selling was banned in 1, 2, 3, 4, 5 countries in order to actually protect the huge volatility on the market and make sure that it would not lead to very dangerous situations. So while of a European nature, I'm sure that there are some national circumstances very specifically defined when national authorities should be able to actually interfere. But it is a concern. And clearly, you know, going for the retail versus or combined with trading, as is proposed either under the Franco-German approach or under the Vickers report, is going to create, number one, great complexities to manage by the banks themselves, which are operating in various places, and also discrepancies within the organization. So we share that concern. I think the systemicity of a particular crisis cannot be defined sort of, I was going to use ex ante, but that's not necessarily the most appropriate expression of my thinking. It's not going to be necessarily a question of the size, the population, the lack or extent of connections. I think each and every case has to be assessed, not ex ante, but ex facts. In other words, really systemicity cannot be just a principle from the books. It cannot be ad hoc either. That would not be fair on the European partners, on the taxpayers in general, and on those who are authorizing the use of ESM capitals. But equally, it's very difficult to actually assume that criteria will encompass the systemicity, because the situation evolves over time, because there are lots of things that we don't know or that, you know, are simply not on the record, for that matter. Now, on the bank sovereign and who should bear the risk of this this necessary distance to be created between the two, I think it should be, and it is to a certain extent, a multiplayer risk. And it is actually not only borne by the central banks of this world, because I would not want to make it Euro-specific. You have the same issue in other countries. And it's clear that part of the problems has to be borne by the private sector, as you rightly mentioned. When capital has to be raised, when special buffers have to be built, it's for the investors to actually reinforce the institution to which they belong and of which they receive and have received dividends in the past. So that there is a shareholder's responsibility there. You could also argue that at the other end of the spectrum, when it comes to the sovereign, there is a responsibility on the governments to actually indicate very clearly what fiscal consolidation path they are on, what is their objectives, what reforms they're going to undertake and implement in order to restore the confidence that is generally causing the value of the sovereigns to be doubted, and therefore to weigh on the balance sheets of banks. So I think it's a multiplayer responsibility, and one that should not only be on the shoulders of the central banks in any particular country or any particular region. Voilà.
Thank you very much. Thank you very much, Madame Lagarde. You clearly said we've got our work cut out. So we want to proceed with the work and call on our host, Dr. Weidmann, to address the audience.